Hello guys, welcome to my channel. So in this video we are going to be looking at this pair we have on our screen here. So this is New Zealand dollar CHF, right? New Zealand dollar Swiss franc, and we're going to be looking at this opportunity and how we came about this opportunity and how you can also come about such opportunities in the future without depending on a video like this. So first of all, we would like to go up to a bigger time frame. On our bigger time frame, which will be the 1 day, or you can go as far as the 1 week time frame. You can see basically this market is dropping, right? There's nothing that you look at it that will hint that this market has reversed. Look at it here, right? Right from this point here, the market has been creating this lower lows, lower highs. These are internal lower lows here, right? This one's our market like this. These are internal lower lows, lower highs. Then we have this external lower low. We have the lower high. We have this internal lower low, lower high, lower low, lower high, lower low, lower high. Then we have this lower low here, lower high here, lower low. Now we're expecting the market to make another lower high and continue to make a lower low. So that is just pretty much the example of this. So you can see that anytime the market creates a lower high, it leaves some sort of demand, it comes back to mitigate this demand, then it continues that process, right? It has been continuing this process for the longest of time. You can see this demand was not mitigated, but this one here got mitigated. So we're expecting for this one to also get mitigated and for the market to drop. So this is just a simple logic that we're using here. And if you go down to let's go down to a much bigger time frame, even a weekly time frame. You can see on the weekly time frame that we have nothing to the left, right? There's nothing that is obstructing this price to the left, meaning that if this market is supposed to change characters, what is going to happen is, as this market has been creating lower lows like this, as the market has been creating lower lows like this, if this market is supposed to change its direction, the market will need to change it on this leg of price like this, right? Once it fails to create a lower low and creates a lower high, right, and starts creating trending to the upside like this, that is when you will plan to buy, because we don't have any pure eye here that will likely reverse price. So now the price is fully bearish and there's nothing obstructing price to continue to the downside. So now let's go back to our 4 hours time frame. So on our 4 hours time frame, what we identified here is we identify our most recent lower low, our most recent lower high, and a demand zone it created, right? So which is our most recent lower high here. This is our lower high here. This was our lower low, which led to the creation of this lower high. So these legs like this are called impulsive legs, and these legs are the correction. So in a downtrend, your demand zones or your supply zones forms on the correction legs. So those are the legs we look to enter the market from when the price reaches our supply zone, right? So now this was our last correction leg, which happens to take out an inducement and also see liquidity above this high. Then it also mitigated an order flow. Now this might be an order flow on a 4 hours time frame, but if you go to a daily time frame, this will be an order block. So it mitigated this order flow here and dropped, right? So we have this break of structure here. After taking out this inducement here, right, the market created this break of structure, it dropped, left us an inducement. Then when it came back, took out the inducement, it dropped, giving us the last break of our current last break of structure. So this is where our last break of structure is. So from this last break of structure, we are looking for the market to create the next break of structure, right? We are looking for the market to create the next break of structure. And where is our trading range? From this high here to this low, this is where our trading range is. When I say a trading range, it simply means that this is the range which we are looking to sell. This trading range, right, in a downtrend, you have what you call this is a bearish trading range, which we are looking to sell from this trading range. If let's say the market goes above this high, we'll no longer be looking to sell, right? This trading range would have failed. So in this case, we are still looking to sell because this market is still within this our trading range. So now in this trading range, we have the market take out this inducement here, and after the market takes out that inducement here, we have a point of interest here, which comes in this sort of order flow here, right? So you can see that when the market taps into this order flow, it just gave a small reaction and continue. So it continued pushing up to this our external order flow. Now if I want to mark this order flow fully, this is how this order flow will look like, but now I refine it in a smaller time frame, and that is why it was looking like that. That's why it now looks like this, right? So the market has come up to this point of interest, it has tapped into this point of interest, and we're looking for our sell opportunity here to target this low. Obviously we have about the 1:6 here, but if I work on it, this will be up to a 1:9, and if I take confirmation entry, this is going to give me about a 1 is to around 1:14 if I use a confirmation entry. So for now, we are still waiting for a confirmation entry to confirm this, right? So I've not really checked on it on the lower time frame, but what I want the market, or what I like the market to do, is first take out this, the low of this accumulation, right? We have accumulation here, we have some sort of an accumulation here, which I'm waiting for the market to take it out. The market has already taken out the high, right? So this is maybe our manipulation here. The market might still come out to manipulate a little higher, but you just need to be wary that this type of pairs, because this pair, this is New Zealand dollar CHF, it doesn't have much liquidity, so it might come back, make as if it wants to break out of this zone, then before it sells. That's just some traps you need to be wary of in the market. The market does that a lot, so you should need to give a little bit of room here for your trade to actually breathe. So this is the pair we are looking at, and yeah, if you learned something from this video, please make sure that you subscribe, leave a comment on which pair you think I should be covering next, and don't forget that this is a swing pair. You can enjoy it if you hold for a very long time, right? This pair, you don't expect this pair to hit TP in a single day. It will take maybe multiple days, like 2 or 3. So once you enter, you make sure that you have set your stop loss correctly, and yeah, you can allow it to run for as long as it wants until it hits TP, right? With just $1,000, you can maybe, with the 1:7 as we have here, you can take it to 7,000, or with just $100, you can take that $400 to $700. I know you might be looking at it as if it's small, but $700, just opening a trade and leaving it to run for a few days, it's not that bad. There are sometimes where you scalp every day and you not still make up to that amount of money. So just better you open this one and leave it. If it hits stop loss, you go minus $100, you look for the next opportunity. But this one is a high probability because this is our extreme POI. Unless this pair wants to change direction, which is highly unlikely, since it has been dropping for the longest of time. Right? Unless the pair wants to change direction, we are still bearish, or unless the pair wants to hit the people out here before it drops. But even that, right, I mean, you still need to keep an eye on this zone. If that happens, you still need to get an opportunity, because I highly doubt this pair will change probability. It will change the direction. The probability of the pair changing direction is very low, since it has been dropping for a very long time. I think it might be due to some fundamentals or some weakness in this major currency pairs, which they don't really actually get corrected in one day. So guys, that will be all for the video. Please have a wonderful day. Leave your comments and subscribe to my channel, so that you can be receiving more analysis like this. Thanks for watching. God bless you all.